8K miles quality. Dilip Buildcon, Unitech as well as an Escorts are some of the other gainers. In fact, Escorts is the big one in focus, coming out with its numbers as well. A good quarter for them. Revenue jump of about 32.5%, EBITDA jump of 71%, margins expanding by 3%, bottom line up 90% as well, even as tax expenses and the tax rate has gone up. So strong performance coming in. Bharat Madan, the Group CFO of Escorts, is with us. Good to have you. A strong quarter led by volume growth. Has it met your expectations, and what's worked for you this time in Q1?
So I think generally all across, if you look at the all three segments, fortunately have done well. So I think it's driven by good industry growth and good demand, I think, on the ground. So tractor business as well as construction, railways, I think all three are doing pretty well. So besides that, I mean, there's some pressure on the cost side, which was slightly disappointment with the inflation sitting in, and we're not able to pass on the 100% increases to the market in this quarter. So otherwise the margin could have been even better. So which we have been able to do now in second quarter. So hopefully I think going forward we will not see that pressure coming in from the inflation side.
Let's break it down then. Let's talk about the tractor volume growth as well. Very, very strong. Is this sustainable going forward from here?
So I think FY19 we had been indicating earlier also, so we'll probably see good growth. So we had indicated a guidance of 9 to 11% for industry growth earlier, but now looking at a good monsoon which we had, that was slightly delayed in certain pockets, it led to some delayed in sowing. But otherwise, the demand on the ground remains very strong, and also driven by some subsidy-based demand because of being the election year. So we expect, I think the industry will do well this year. So we expect maybe we are upping the guidance on this tractor industry growth from 9 to 11% to 12 to 15% now for the full fiscal year.
Right. You've also had a strong traction on the construction EQP segment as well. Picking up happening in infra projects, election year, so expect a lot of government capex as well. What's the kind of capex or what's the kind of volume growth that you expect in that area?
So construction actually can give us very positive surprises in this whole year. So this last year also we had seen strong 30% plus growth happening in the industry there, and first quarter also was something similar. Though normally second quarter will be a slow quarter because the rains being there, so normally it's not a very good season quarter for the infrastructure segment. But again, H2 can really be a very strong period again this time. So Q3 we are very bullish again on both tractor and construction equipment. So overall, I think full year basis, we expect to actually give 20% plus growth this year.
Give us an outlook on your product mix as well, and of course, what's the kind of margin trend that you're looking at?
No, I think if you look at the sectors, all three are growing. So I don't think there will be a significant shift in the businesses. I think in their overall size in the entire portfolio. I think tractor will remain strong. So maybe it used to be 80%, so maybe it come down to slightly lower at maybe 37, 38%. But otherwise, I think all three businesses will remain more or less in the same range. So we don't expect there to be any negative impact on the margin because all three sectors are actually upping the margin now this year. So overall, it should only be margin negative for us.
Right. Any price hikes that you're looking at to offset higher raw material costs?
So we already raised the prices. So like on tractor business, we had done some price increase in first quarter also. So it is not 100%. We normally pass it on with the lag of the quarter. But first quarter saw a very high increase in the steel prices. So it led to some major inflation impact coming in the first quarter. But in the second quarter, we already passed on that price increase. From mid of July, we're taking a price increase for tractors. Same thing we've done in construction, but construction we're still carrying some lag, so we've not been able to pass on the entire price increases to the market, which is why you've seen the margins in the construction have been slightly under pressure. But tractor, I think we will be able to pass on whatever inflation happens so far.
Any product launches that you're looking at? Any products that were launched in Q1, and of course for the rest of the year, what's the kind of pipeline?
No, so there were not any launches in Q1, but obviously there are more products in the pipeline which will happen during the course of the year. So I think we'll have a complete launch day which is planned for 6th of September this year. I think so. I'll not really like to disclose at this point in time what new products are coming in. So we have an exclusive day which is planned only for the new product introductions during the year, which is 6th of September. So I'd hold my views till that time, and that time we'll see a lot of new innovative products getting launched from the company stage.
What about the railway equipment division? What's the order book looking like over there? What's the kind of average execution timeline that you have for these orders?
So as of end of June, we had 300 crores plus order book in railway business, so which will get executed on next 10 to 11 months. So we we expect, I think, that business will again continue to grow 20% plus, so with a good margin. So overall, this quarter we had very positive product mix this time, so we've seen very strong margins coming in the railway side. But on a full year basis, we expect, I think, the margins will sustain about 17-18% sort of level for railway business at the expected top line base.
Your capex plans for FY19, what are they looking like?
So we have a plan to increase our capacity on the tractor business side from 100,000 to 150,000 units. So there we have planned for this year capex of about 300 crores. Out of which about 100 crores will be for expanding the capacity for tractors on machining side, and balance 200 crores will be more towards product development across all three businesses.
And so then tie it all for us. What's the outlook for FY19? What are your growth plans?
So on top line, we are expecting, I think, the businesses, the kind of growth we are facing, I think overall we should be able to see 20% plus growth at the top line level for the full year basis. And on margin, we have been giving the guidance of 100 basis point improvements over last year at a company level margin. So I think it should be maintained as of now.
Right, that is the management of Escorts for you, seeing a strong reaction in trade today on the back of those numbers. A big boost coming in from some of those performance metrics for Escorts, and you're seeing that stock up 3.5%. Meanwhile, at the lows of the day is an Indigo right